And currencies are collapsing, stock markets are collapsing, bond markets are blowing up, and it's all happening. And the European banks are under stress because they've been lending money to Asia, and we kind of know that whole game. We're kind of midway through this, and the hedge funds are starting to figure out what's next. Right? Because there's always a daisy chain when it comes to leverage. What's next? Who's going to blow up next?
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about different countries' crises and how they impact on economy. According to Raoul Pal, currently, there are events happening in Thailand when a country devalues its currency. It can have a significant impact on the global economy. There is a sovereign debt crisis across Asia. And currencies are collapsing stock. The markets are experiencing a downturn. The bond markets are experiencing significant activity, particularly impacting European banks due to their lending practices. Asia and Raoul Pal mentioned that they have a good understanding of the situation and feel like they are halfway through it. And the hedge funds are beginning to anticipate what comes next, as there is always a daisy chain. What's the next move in leveraging? Who will be the next big player to watch out for? And Raoul, don't forget to review Stan's trades. Stan closely observed Miller's trades as Raoul Pal had visibility into them at Goldman Sachs by monitoring the flow of trades. He could gain insights into the patterns and trends being followed. He was able to view the positions in the futures booking system, and Raoul could see how he had added layers, initially focusing on FX bets, then expanding into equities, commodities, and fixed income. And lots of things Raoul Pal discuss, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance. Thanks.
1998. I don't know if Roger Hurst had yet joined. I don't think he joined me yet. So he came and joined me as my sidekick. And we were wildly overworked. I couldn't go to the bathroom during the day. It was so busy. It was like chaotic markets. All of Asia was imploding. The European banks were imploding. The hedge funds were trading like crazy. You know, later long-term capital blow up. I mean,
This is the Asian financial crisis, the beginning of the Asian financial crisis, right?
This is 98. This is about 97, 98, I think. So and I would see the trades of Tiger Management, Julian Robertson, who sadly just died. I would see how they traded. I would see how Paul Tudor Jones traded. I would see how Stan Druckenmiller traded. And most of these guys, long-term capital management, all of them. But the guy who was the most aggressive was Lewis Bacon. Lewis Bacon of More Capital Management. And I didn't know him that well, but I knew his team very well. They were my biggest client by a long way. And they were obviously very busy over the Asian financial crisis. It's like hedge fund heaven. Everything's going on. The economies are imploding. Currencies are collapsing. So what's going on at this time is Thailand devalues its currency, and that starts tipping the world into this rolling sovereign debt crisis across Asia. And currencies are collapsing, stock markets are collapsing, bond markets are blowing up, and it's all happening. And the European banks are under stress because they've been lending money to Asia, and we kind of know that whole game. And we're kind of midway through this, and the hedge funds are starting to figure out what's next. Right? Because there's always a daisy chain when it comes to leverage. What's next? Who's going to blow up next? And I remember looking at Stan Druckenmiller's trades, because I could see them all at Goldman. And
the flow, because you could see the flow they were putting through.
I could see the flow. Right? I could see the positions in the futures booking system, and I could see how he had layered on bets, starting with FX, but then equities, commodities, fixed income. I could see how he weighted his bets. It was fascinating to see. Obviously, it was all private information, so you couldn't discuss it, but I could see how Stan's mind was and how he would bet in this very fast-moving, dynamic market. And More Capital, very aggressive, very amazingly talented people. And Lewis Bacon is one of the most incredible people. And I get the phone call from the head of trading, and in the market chaos. And he was always really aggressive, but he was a good friend as well.
According to Raoul Pal, the significant trade during the Asian crisis involved shorting the currencies due to their liquidity. It was a huge move, but the issue was the interest rate. Markets were adjusting by increasing interest rates, and speculators were borrowing the currency, resulting in a 20% borrowing cost, making it quite expensive. It was challenging to play this game across Asia. If you were fortunate enough to secure your funding at a low cost, you could execute these trades. However, timing was crucial in this scenario. They were starting to become less relevant due to the 20% cost of capital required. South Africa found itself in a rather unique situation. There were two discussions about various types of currencies: the financial rand and the commercial rand. The commercial rand was interchangeable. You have the option to trade it globally, but keep in mind the interest rates associated with it. Everyone is eager to sell it. Raoul Pal is talking about a 20-something%, let's say 27%, which is pretty wild for foreigners. Raoul was unable to participate in shorting the financial round. He can't recall the specific order, but he believes it was the financial round that he was unable to shorten. Let's back to the Raoul Pal interview.
He's like, he calls me up and goes, "Raoul, sell South Africa," and puts the phone down. I'm like, what? Do you want to sell in South Africa? I'm an equity derivative desk. It's not the currency. It's not a currency desk, in which case you know. It's like, so what do you want me to sell? And how much do you want me to sell? And at what price do you want me to sell? None of those three were there. So I call him back and I said, "Chris, what do you want to do?" He goes, I think his words were, "just fucking sell South Africa." And then he says, "Oh, stop. Just don't sell the futures contracts. Sell the stocks." I said, "Do you want it to even look like, do you want it to look at the index?" He goes, "I don't give a shit." Hangs up. And then every 10 minutes, he'd be like, "How much have you done?" I'm like, "It's South Africa. It's not very liquid. Just keep going." This went on for 5 days. 5 days.
So all South African equities, any equities that you could...
Yeah, anything that was liquid, we sold it. So, okay. The South African stock market collapses. About a month later, 6 weeks later, the phone lights up again from More Capital. Buy them back. You know, and it was the same messy process. And 3-4 days later, we finished it. And I work out the maths. I'm like, all of that mess of the market collapsing, you moving the price, all of these crazy orders, blah, 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 for 8%. And I'm like, you know, the position, I can't remember what it was, $500 million or something. It was big. But it wasn't enough for More Capital, who ran 10 billion plus, to really move the dial, considering that currencies were collapsing and all of this stuff was going on. So, in a quiet moment, I called back the head of trading and said, "What did Lewis just do there? Because that seemed like a complete waste of time and effort." He's like, "What are you talking about?" I said, "You've made 8% on that big, messy, multi-day thing." He goes, "No, we didn't. We made 58%. It's one of the best trades we did all year." I'm like, what am I missing here? So then he goes on to explain. The big trade in the Asian crisis was shorting the currencies because they're liquid and they were moving enormously. But the problem was the interest rate markets, they were raising interest rates to stop the speculators borrowing the currency. So if you have to borrow the currency, it's now 20% borrow costs. It's expensive and it was difficult to do. So across Asia, this game had been, if you were lucky enough to secure your funding, the borrow costs, you could do these trades. But if you were too late, they were becoming marginal because there was 20% cost of capital just to do it, maybe more. So South Africa had a really unusual situation they had two currencies, the financial rand and the commercial rand. The commercial rand was fungible. You could trade it around the world. But interest rates on that, because everybody wants to short it, were like 20-something%. Call it 27%. Crazy rates. As foreigners, we couldn't short the financial rand. I can't remember which way round it was. I think it was the financial rand we couldn't short. And so I'm like, okay, I understand. What were you doing here? He goes, oh, it was pretty simple. He said, we realised that when you short stocks in South Africa, your borrowing costs were 0.5%. And you got short the financial rand, which nobody else could short. And he said it fell 50%. Nobody else had figured this out. It was a way round funding that nobody else had figured out. And they'd seen it and acted super fast before anybody knew what was going on. And so what I thought the trade was shorting the stock market. But that was just one of the tools to get the actual position, which was to short the currency market, which had fallen 50%, and get round the issues of stock borrow, regulations between markets, all sorts of stuff. It was at that point I realised that different people play a different level of game than I could.
According to Raoul Pal, finding the right balance is crucial. Being overly simplistic makes things too obvious, while being overly complex can be overwhelming. It's complicated that the trade never works anyway. And Raoul Pal mentions that many people have spent their entire careers focusing on that specific option, always overthinking everything, finding the perfect balance of speed and depth in thinking, and going beyond most people's level of analysis without getting bogged down. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.